Hi, everyone, and welcome to another episode of Money Monday. I am, as always, your friend in finance, Henry. It's wonderful to see you all today. Welcome to the first of a series that will sporadically pop up on myth busting commonly held financial myths. Today, we're going to be talking about one in dealing with mortgages. Mortgages are can be a stressful thing to go through, trying to apply for a mortgage, qualifying for a mortgage, especially today when prices have shot up. So today, there was a specific tweet that I saw that I wanted to share, to do a little bit of myth busting and talk about why it's a little bit of a myth going on here and some of its reasoning, and then what can you actually do about it? So let me share the actual tweet. The tweet in question is this one that popped up recently. I saw it says the median annual pay during the Great Depression was 22% on the cost of an average home. Today, it's 14%. That means that pay relative to human cost made it easier to buy a home during the Great Depression than right now. This is absurd. This is capturing a lot of the frustration that people are having with qualifying for mortgages. And at the same time, it is not quite correct. It's giving the wrong impression about how things were in the Great Depression. During the Great Depression, things were much, much worse. You had access to a lot fewer tools than you have access to today. Let me explain why it's wrong. Back during the Great Depression, you did not have access to the same kinds of mortgages you have access to now. What do I mean by that? There are different kinds of mortgages. Yes, in fact, America is very unique in the kinds of mortgages that it's able to offer and the kinds of regulations it actually has on its mortgages, especially 30-year fixed rate mortgages, which are incredible. But back in the Great Depression, these did not exist. So think of it instead of, right now you go qualify for a mortgage and they go, okay, this is the amount of monthly payment you'd be able to make. Back in the Great Depression, they would do the same thing, except they would go, well, guess what? You can only make $100 payment per month. So you have to have this whole loan repaid, not within 30 years. You have to have this whole loan repaid within maybe 5 years. If you might be able to qualify for an interest-only loan. It's called a balloon payment. So after 5 years, you have to pay the rest of the loan. Those were the kinds of loans that we had available to us back then, and those made homeownership even more out of reach for a lot of people. They were still frustrating and bad for farmers, but that was where the concept came for these balloon interest-only payments, was that you paid only interest, but during that entire time, your farm was starting to produce stuff. It produced stuff, and it was able to generate enough income on its own to pay off that loan during that balloon payment. But for normal people, if you're just buying a condo, if you're just buying a single family home, the home itself is not going to suddenly start generating money for you to pay off that balloon payment at the end. 30-year fixed rate mortgage loans only became legal in the government in 1948. So that's after the Great Depression all completely happened. The government suddenly realized we need to help people by passing these laws, by making these accessible. The FHA started in the 30s, but again, the kinds of loans that were available to people, it's like being forced not just to a 15-year loan that a lot of people have that are much more expensive monthly than a lot of people can't afford monthly nowadays. It would be even more monthly payment. Your monthly payment would be even more than that. Those were the kinds of loans that were available during the Great Depression, and that's why this is not a good apples to apples comparison. And what ended up happening, so let me explain a little bit why the mortgage industry is really frustrating right now to a lot of people. What's ended up happening is that lenders, especially when you're going to apply for a loan, what question do people ask? The question is, the lenders ask, how much can you afford? Which immediately, boom, puts you up at your upper anchor of how much you can actually afford in your mortgage. That's why suddenly people have been getting these big loans for these houses, and it's putting a strain on their finances. That's one of the reasons why mortgages are frustrating. People feel this intense weight about their financial necks. On top of that, by having everybody always asking that question of how much can you afford, notice how that's different than what's the right sized house for you, which is what a financial advisor asks. How much can you afford immediately starts pushing the ceiling on the prices of houses. That's one of the reasons. There's a lot of reasons why the housing market is crazy right now, but one of the reasons is that the low interest rates that we had since the beginning of COVID, the low interest rates meant that suddenly people's monthly payments shot down. If the monthly payments shoot down, people can afford a little bit more, and that's what people do, because we're not asking the question, how much house is the right amount of house? We're asking, how much can we afford? So suddenly people, everybody, it's you, it's thousands of other people suddenly start going, oh, well, that means I can get a little bit of a bigger house. Thousands of people doing that all at once pushes up the prices of houses. If thousands of people, that's normal people, that's landlords, that's institutional investors, pushing up the prices of houses. That's what's been happening. And it is incredibly frustrating. And it's one of the reasons, again, is because people are asking the question, how much can I afford? As opposed to, what is the right sized house for me? And that's creating all kinds of frustration. But again, do not compare our situation with what happened in the Great Depression, because those are completely different situations. If we were all back in the Great Depression, none of us would be getting houses. There is still a path to buying houses today. There are tools available to us, including 401ks, including IRAs, none of which were available to us back during the Great Depression. You have a lot of tools available to you. You have a lot of things that you can do to make progress if home ownership is something that you really want. If that is something that you really want, then please feel free to reach out to me. If not, then please still feel free to hit the like button, hit the follow button, like us on Facebook, like us follow us on LinkedIn, on YouTube. We have a lot of great information here for you. Thank you all so much. Have a great Money Monday. Bye.